Hey, how's it going? In this video, I'm going to be talking about liquidity and what liquidity is. Liquidity refers to the degree in which an asset or security can be quickly and easily converted into cash without significantly affecting its market price. It's a critical concept in finance and investing, as it affects the ease with which individuals or organizations can access funds or convert their investments into cash when needed. Liquidity is typically measured on a spectrum, which or with assets falling into one of the following categories. Highly liquid, these are assets that can be easily and quickly converted into cash without the significant loss of value. Examples include cash, money market instruments, and highly traded stocks and bonds. Modern liquidity, these assets may take a bit more time and effort to convert into cash without substantial impact on or their value. Examples include real estate, properties, less frequently traded stocks and bonds, and some types of collectibles. Liquid assets are those that cannot be readily converted into cash without significant reduction in their value or without prolonged time frame. Examples include private equity investments, certain types of real estate, and sometimes complex financial derivatives. The level of liquidity of an asset or investment is an essential consideration for investors and businesses. Having balance of liquid and illiquid assets is often recommended to meet short-term and long-term financial goals. A lack of liquidity can lead to financial difficulties. If an individual or organization needs cash quickly but cannot sell their assets without significant loss. If you do have a lot of money tied into perhaps your overall equipment, tables, engineering, the systems, perhaps if you would be able to take those assets and sell on the market, that perhaps overall value you will look at, I don't know, 50%, perhaps slightly higher than that, depending on how old that equipment might be. But overall, as a business owner, you always need to understand that and how you overall managing capital and your own understanding when it comes to overseeing your operations and how much liquidity you as a business owner would like to have for your business, and how much of that capital should perhaps cash flow overall, and how much of that would be tied into different assets, and how you overseeing and managing your capital. Liquidity is also a crucial factor in functioning of financial markets. Market liquidity refers to the ease in which assets can be bought or sold in the market without causing significant price fluctuations. Liquid markets typically have high volume of trading activity and narrow bid-ask spreads, making it easier to it's getting deeper and deeper. I don't know if, how to explain it, how to explain this kind of terms to anybody else. Making it easier for investors to enter or exit positions without affecting price dramatically. Uh, One of the ways to look at it, if you would take that particular asset and how much money would you like to be invested in overall, perhaps equipment, overall business, how much capital you want to tie it into an asset. When's a good time to do that? When considering economic cycles, when's a good time to perhaps even make those investments? When's a good time to do that? So it's so many things to take into account when making this kind of decisions. Central banks and financial institutions often monitor and manage liquidity in the broader financial systems to ensure stability. They may use various tools such as open market operations and interest rate adjustments to influence the supply of money and credit in the economy, aiming to maintain an appropriate level of liquidity to support economic growth and stability. Let's take an example of the business and how business can manage liquidity. Imagine a retail company that experiences seasonal fluctuations. It in its sales. During the holiday season, sales are significantly higher than in other months. To manage liquidity effectively, a company employs several strategies. Cash flow forecasting. The business regularly analyzes its historical cash flow patterns and create cash flow forecasts. This forecast helps predict when the company will experience cash inflow. It can be holiday sales or similar, and outflow, paying suppliers, employees, and other expenses. Line of credit. A company establishes a line of credit with a bank or financial institutions during periods of low cash flow. Off peak months, a company can tap into this credit line to cover operational expenses such as payroll and restocking inventory. This ensures it has enough liquidity to operate smoothly even when sales are slow. I would. That's one of the strategies. That sounds risky strategy. It depends on the terms of the contract, but that sounds like a risky strategy. But either way, inventory management to optimize liquidity. The banks closely manage its inventory levels during the off-peak months. It may reduce inventory orders to minimize tying up capital in unsold goods. Conversely, as the holiday season approaches, it may increase inventory levels to meet increased demand. Accounts receivables management. This company actively manages its accounts receivables to collect payments from customers promptly. It may offer discounts for early payments or implement a stricter credit policy to reduce the risk on unpaid invoices. Ooh, some of the companies, the way how they managing that, or paying suppliers only within the window of, I don't know, 90 days. Some of those companies, some of I cannot say names, but some of those companies, the way how they're managing, increasing that to 90 days so they can have more liquidity in expense of suppliers. Cost control during periods of lower sales. The business focuses on cost control measures such as reducing discretionary spending and renegotiation supplier contracts for better terms. Cash reserves. The business sets aside a portion of its profits during the peak seasons to create cash reserves. These reserves act as a buffer during slower months, ensuring that essential expenses can still be covered. Emergency contingency plan. The company develops a contingency plan outlining actions to take in the cash flow problems persist beyond expectations that might involve additional cost cutting measures or accessing its line of credit. I would highly recommend for anyone who's interested purchasing a journal. In the journal, I'm sharing a lot of information that any person looking to begin and better themselves, as well as structuring in the beginning your overall personal time, as well as perhaps structuring your overall company. But everyone needs to start somewhere. If you would begin with 24 hours, as well as your personal budget, and trying to understand overall your time, your own budget, from there progress into manage perhaps number of budgets and what that would look like. I'm sharing a lot of information in this journal. I would highly recommend for everyone to purchasing it. You can find it on my company's website. as well as you can find it on the top retailers have this journal available as well. If not, feel free to reach out to me. We'll see what I can do. Thank you. To summarize this video, that would be implementing these liquidity measurements, strategies, and business can navigate throughout seasonal variations in its cash flow and maintaining its financial stability throughout the year. These examples demonstrate how a business can adapt its financial practices to ensure it has necessary liquidity to operate effectively in different circumstances. Overall seasonal operations is just one of the examples of fluctuation in liquidity and overall capital coming in and capital going out, and how you need to adjust that. Perhaps in the beginning, depending on what kind of industry you are picking, take into account seasonal products or services that you're offering. You might consider beginning perhaps of doing something different in the beginning, and perhaps then from there you can perhaps venture into that. That would prevent that problem from happening in the first place. Thanks for watching, and see you in the next one.